Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Chris Bates, welcome to this episode of the Australian Property Podcast.
Owen, so good to be here, mate. How's your week been?
Yeah, not too bad, mate. Not too bad. Just getting a lot of stuff done. I actually bought turkeys last night, like actual living turkeys.
Wow.
Yeah. I was going to get some chickens, and then I thought, why don't I get some turkeys while I'm here?
Yeah. And I assume you're not going to eat them?
Not yet, not unless they keep making the noises. If you hear any squawks or really loud noises coming from outside, that could prompt a dinner plate discussion at a later time. But no,
it's not an investment idea at all?
Not an investment, I don't think. But I tell you what, they're big animals, and I'm surprised about that. How about you? What's news with you?
I haven't bought any turkeys. I've been sick still. Probably our cats probably want to run away, actually, because they're not getting much love. So maybe they'll make friends with your turkeys. So, yeah, mate, same. Well, I got really good news, actually, this morning. We got finalists in the Australian Broking Awards, both as a business, but also individually as a broker. So that's a national award. So there's only 10 businesses or individuals that got noticed for that. So that was a big win for the team. And lots happening. A new guy joined the team this week, Piyush. He's awesome. He's a young dad, and he's smashed it in his first week. So, yeah, always lots happening at work and outside of life as well. Cool. How many do you have in your team now at Rask? We're 17 now. Yeah. So there's 8 locally, 9 offshore, in Nepal and Philippines that do a lot of our lots of stuff for our business. So, yeah, we've grown dramatically. We were probably circa 9 to 10, 12 months ago. So we really invested heavily in, all parts of the process. So all areas have really grown as a team. So, yeah, in anticipation of, I guess, more and more confidence and sentiment to move back into the market. So we took 2022 as a year of really investing in everything to do with the business, the branding, the systems, the processes, the team, the ongoing service, our technology. There's so many things we did at a business level because it was an opportunity as the market is a bit slower in transactions to invest as a business.
For sure, and hopefully that pays off. Like you've won many awards, both individually and as a team, at Rask/Wealthful before that. So, I'm awaiting, and I know it's stiff competition because you're competing with all of Australia, mate. But just to be in the top 10 is an incredible win and well deserved. So we'll play along, I'm sure. So we're obviously on a mission to be Australia's most trusted property podcast, Chris. And one of those things that people have to do when they get into a property, not have to do, but most do, is they need to go through the finance process. And you are a mortgage broker and an esteemed one at that. So it figures that the two of us would jump on here and talk about this. I want to start with the very basic question that we always get, which is, when should you start thinking about the financing piece of property?
Oh, I think it should be one of the first elements, right? Because you can have all these great ideas that I want to buy this property and I'm going to flip it and do this reno, and you're sitting and watching The Block for the 15th season and you've got all these amazing ideas, but then you go and look at suburbs, you go to open homes, and then all of a sudden you go speak to a bank or a broker and you go, actually, I can't borrow money. It's a bit pointless, right? So I think finance has got to be, and to be honest, the game of property investing, Stuart Williams, an amazing financial planner in Melbourne, right? He's got a business called Pro Solution. He did a book on this, and I'm going to steal it from him. So credit to Stuart. But he's very right in saying that, property investing, right, or building wealth, even you could go that far, is really a game of understanding how to use debt wisely, right? And because leverage is the tool that grows wealth the most, right? And so it's not a case of knowing what the right property is or looking for the right property opportunity, because there's always property opportunities. What the key thing that will allow you whether to take those up or not is how you play the game of lending and how you understand it, not just now, but how it's changing, how it's potentially going to change in the future as your situation changes. And you've really got to be on top of that sort of side of your financial wealth, because that's your real tool that you can use to either invest more, but also to protect yourself with buffers, etc. So, it's people get excited by learning about the property market and what makes money and what can invest, but really it's a game of understanding how to maximize your ability to borrow and protect yourself. Because once you've got that, then there's only limited opportunities you can really take action on. Property is a real lumpy thing. You might only buy 1, 2, 3 properties. Like, it's not like shares where you're analyzing thousands of stocks and you're going in and out and you're constantly trading. That's just not what happens in the property market. So it's really a game of lending.
Yeah, you're right. Like there are only a few decisions that really matter, right? And I think a lot of us get scared off this idea of debt, but there's obviously good debt and bad debt. And I, for one, think that a mortgage on a home is actually a very good debt to have. It's typically lower cost, and if used wisely, there's tax incentives as well. So for your primary residence, even if it's an investment property too. So use it wisely, and you look around a lot of the people in your communities, in your circles, there tend to be people that have had some exposure to property or business or both. So don't look away from that. But okay, so you want to get in contact with a good broker or just think about the finance process early on. What are some of the reasons why, I'm just at the very beginning, why people would come away from talking with you or another broker and be disappointed? So you mentioned like people get like rudely awakened kind of thing. What are the reasons that most people kind of have that shock?
Look, there was a time when, 95% loans were pretty prolific, right? So people thought they only needed a 5% deposit. They might not have realized they needed to pay stamp duty as well. Now, there's always state-based rules that are incentivizing first home buyers into the market. In particular, in recent years, those have been targeted in reducing stamp duty for first home buyers, whereas before it was encouraging first home buyers to get grants, which meant that they bought house and land packages and new apartments. So they have actually got a bit better. They're not just forcing people down the worst properties. So I think that I guess those rude awakening is probably the deposit hurdle, how much you need for a deposit. But that can be a bit of a catch-22. Sometimes people come in and they think they need more deposit than they need. They think they need 20%. So, the reality is it's very hard to get a 5% deposit home loan. I will caveat, though, that in the last 2 or 3 years, the government have basically released 5% deposit home loans. It was for 10,000 people. And now there's 35,000 from July, in a couple of weeks, well, next week, right? So, that is definitely an option. And a lot of people, whether you satisfy the income requirements and whether you bought properties before and all that sort of stuff. But that's the first one. The second one probably is, let's say someone has swapped jobs. Maybe the last job, they were getting a great bonus. Now they go to the new job and they've got an OTE package that's really promising, but it haven't been paid any commissions or bonuses or overtime. And, a bank can't rely on what you earned at your last job. So that's definitely an issue. I've seen clients go, oh, I shouldn't have quit. Even in the same vein, starting a business, sometimes people, assume that, maybe 6 months in business or 12 months is fine. Yeah. Well, banks usually need at least a good couple of years under your belt. I would say they're probably the big ones, and then potentially it's maybe understanding the impact of other debt. Whether it's HEX, is becoming a real problem, because HEX interest rates have gone up and, a lot of people got a lot of HEX debt, right? Credit cards, the limits on those, car loans, etc. They're like, oh, I didn't realize it would impact me so much. So they sometimes have to sell cars and pay off HEX debts and do things that, they didn't think. So they've, they wanted that car, but now it doesn't make sense. And they're probably the things. The spending side probably was a key issue in 2019. So people looking at, I was doing the Uber Eats every night. I was going out for dinner every other night. Going away with friends and, spending a lot of money because you're young and, wanting to live life to the max. But then they also make this pivot and they go, I want to buy a home, right? There was that mentality shift, right? Now I'm knuckling down and spending was a bit of an issue back then where banks would look at it, but not so much, in 2023. So that's not a huge issue generally. Credit file, I'm rambling on here. Credit file can be an issue. we do a credit check straight away when we're doing a strategy. It's one of the first things we do as part of the process. Two reasons. One, we can find out if there's any issues. And the second thing is we can find out what a bank would see from your credit file. And if there are other debts that you haven't disclosed or what those limits are, we can find out all that information out really easy. So sometimes people are surprised they've got an issue with their credit. They, miss them payments on that phone bill, or they did a default or something. And, or maybe they've just had a credit card. They didn't pay on time. They didn't know that it damaged their credit file because they never used that credit card. And then maybe the annual package fee rolled over and they had all these late payments and they moved addresses or something. So, or even credit fraud. So credit's a big thing that you definitely want to check out. It's really easy to do that online. And that's probably it. That's probably covers most bases.
So we've got, like people with OTE or like bonuses and commissions if they switch jobs, or if they're just not earning those, like the bank will look at that. People thinking that they need a 20% deposit when they may not. Then there's obviously if you have a business, we've talked about this before as both of us being business owners, there are instances where you do need to wait 1 or 2 years, maybe more, I don't know, until your business is ship shape. So consider maybe if you can put that business off and get into the property if that's your goal. Things like debts, HECS, and credit cards and loans. And then finally the credit file there, just checking that yourself. So you mentioned that checking the credit was part of your process that you go through. And I am pretty privileged this because I'm both a client of Blusk and yours, but also we have a partnership now where people can apply to work with you and the team at Blusk, just following the link in their podcast player. So if you do like the idea of what Chris is talking about, you can go ahead and get started on the process and get some expert advice. But having seen this up close, I know that there are a few distinct steps that people have to go through. Like people think that maybe once they approach the bank or approach the broker, it's done and dusted. But that's kind of like when the work begins from your side, and indeed from people actually having to put in a little bit of effort to get through that process. So can you walk us through the major steps involved?
Yeah, it's interesting, right? I think back in the day, it used to be 2-page application forms and no verification. And maybe the broker did have a lot of power, and even the bank staff had a lot of power improving loans, which was based on character and, whether they liked you or not. But nowadays, it is responsible lending guidelines are really comprehensive. I mean, a lot of people talk about issues in our home loan lending market and things like that. Like those issues have washed through. These are a long time ago. For a long time, there's been very comprehensive looking at your situation and verifying everything about your situation. So the first step is, I guess, figuring out what your overall strategy, what you're trying to achieve. Like you shouldn't just go through a broking process and until you sort of really kind of understood what you want to do. I think there's a bit of because ultimately that strategy needs to be tailored towards what you want to do. Let's say I'm buying a $300,000 property to, do a renovation or, want to stretch, that's the strategy would change. But ultimately, so once you've gone to a broker, and I would suggest going to a broker, obviously because I am one, but also ultimately because 70% of loans now go through brokers. In the UK, it's 90%. Brokers have started at 2% back in the early 2000s, and now it's grown to 70, and every year it grows. There's a reason for that. It's because consumers trust brokers. They offer a great service. They offer a great variety of banks rather than you having to go bank to bank and checking policy or rate. And also, there's no fee generally attached to it. The brokers are packaging your loan up, putting it on a silver platter, checking all the things, making sure it fits bank policy, guiding a client through the home loan process, educating a client, and then giving you as a customer to that bank that they then go make money on that home loan for 30 years, right? Or for however long you stay. So the banks pay brokers for that introduction and also for all that work that they do in getting that customer loan approved. And then ongoing, they pay brokers as well. So you don't pay brokers direct, the banks pay them. And then on all the banks pretty much pay brokers the same. So I would suggest absolutely going to a broker. We can talk about how to find the right broker.
Yeah, that's probably a good thing to do actually before we get further into the process. Like, how do you actually find one?
Yeah, it's interesting, right? So there's 19,000 brokers. The MFAA do a 6 monthly report. It's online. Anyone can access. It's called the Intelligent Insights Report. And in that report, you will see pretty quickly that there's a small subset of brokers. There's the 80-20 rule, the Pareto principle, but, ultimately that really plays out in the broking market. So of 19,000 brokers, 10, 20% of brokers are writing 80, 90% of the loans. And, that's the type of brokers you want to work with. The reason is not because I don't want all the other brokers to be successful, and they're absolutely helping the broker story, but you need brokers that are quite active in the market to really understand what bank policy is doing, what different banks are doing right now, because they need to have lodged loans over multiple lenders and, have relationships with these banks to, not just try their luck, a bit of a mud on the wall approach that a lot of brokers unfortunately do. Like, I'm just going to try it with this bank. If it doesn't work, we'll go somewhere else, because they're, playing around with your credit file. And so you do need a broker that's quite active, and has been around for a few years, and everyone started at day zero, right? Day one. But as a consumer, you would say, look, I want to get someone who's experienced, right? And it's one of the challenges of starting a business in any industry. You've got to get that experience, and so a lot of those brokers do work under other brokers where they can get a lot of mentoring, and then they start their own, which is a good step. So trying to get a broker with a good run of experience. I mean, obviously friends and, family referrals. About 40% of our clients come from, referrals, right? So they've, and that's definitely a good way. I would say we're an education focus. I've always valued content, right? I've been producing content on LinkedIn and podcasts and, speaking at events and things like that. I do think a broker that focuses on education is wanted, because what you want from a broker experience is someone who's not going to validate or facilitate a loan. You want someone who's educating on the process. Why are they using this bank? Why are they recommending this policy? Why are they structuring the loan this way? So not only are they educating you, but they're actually trying to give you advice. So if you call up a broker and they're just saying, what do you want to do? How much do you want to borrow? I can make it happen. It's not really a broker. You're just getting someone to facilitate and validate. So that's a good litmus test. Or if they start talking about products and rates, like that should be the last part of the overall conversation. It should be focused on, what are you really trying to achieve? Tell me about your family. Tell me about what your plan is. Why are you buying that type of property? What cash have you got? What do you do for work? What's your plans with work? Where are you going to live long term? Those type of questions are what a great broker should ask you, not so much what's your deposit, what's your income. So you might have to go through a few. There's nothing wrong with that as well. Just being upfront and honest, and if it's not the right fit, then just calling a spade and moving on to the next one. So you don't need to be locally based. I think what's one of the benefits of being a broker is that we've got clients in every state. We've got clients buying in every state. Loans are sort of universal, I guess. And then there's small tweaks in terms of mortgage documents, but ultimately a broker can lodge loans across the whole country. So and broking does suit itself to lots of small conversations over phone, online. It's not like this big presentation for 3 hours. That it's like lots of small conversations. So rather than seeing a broker, lots of times, and all docs are digital now. All the banks have, do digital docs. So you don't actually go to a broker's office to sign documents. That's just thanks to COVID, that all got wiped out in 2020. So it's picking the right broker, education focus, asking you the right question, wants a long-term partner, has got a good reputation, and their sort of style aligns with you. You feel like you can connect and ask questions. I think, you want to have that relationship where you feel like, they're not just talking at you. You can actually challenge their advice. You can ask questions, and really, because that joining those dots is really important, because these are huge decisions. And even if that person is giving you advice, you want to have the confidence to just talk it through with them.
I went through a few brokers, right, before I ended up with you, and I probably should have just gone with you at the beginning, in hindsight, but that's okay. And I have seen that experience play out with so many others that I've come across, like so many people with brokers, and like they'll give them a call and they'll say, hey, this is my situation, et cetera, et cetera. But you're right, some brokers do just want to know what's your deposit, what's your income, and then, okay, I'll call you back. But a lot of them don't, to be honest, Chris, in my experience and hearing others. And so I think like you can generally get a sense of a good broker straight away. And I've had a few experiences where, you ask questions and sometimes they don't even want to give you, not that I don't want it, maybe they just don't have the time to just educate you on like, what does this thing mean? So a broker who can actually be on your level and communicate with you, I think is so valuable, because it is such an important thing. this is my personal opinion, Chris, like buying a home, if it's your first home, it's very important. If it's your next home, it's even just as important. And having someone, an expert in your corner, truly in your corner, is really valuable. And back to the process. So when people come through and they submit information through to us, and then it's handed over to your team, we ask them very basic questions like, do you have any debt? Do you have this? Do you have that?
Yeah.
So should people be having those pieces of information ready when they approach the broker for the first time?
Yeah. So, I mean, I guess there's a few things that you'd really want to know. So you really want to know about it. So there's a few things you need to prove to a bank, I guess is the way to think about it. So you need to prove who you are. So you really want to sort of make sure you got your driver's license and your passport. If you haven't got one of those, maybe your birth certificate, Medicare card. If you're overseas, visas are, because visa classes really matter in terms of what banks will lend on or not. So knowing what your visa class is and, whether it's a bridging, et cetera. So proving who you are and your status, I guess, is really important. Proving what you own. So like, where your savings are, like knowing, ideally having it in one account, that's fine. You've got multiple banks. If you've got, properties, having rates notices, et cetera. So you've got to prove what you own, prove what you owe. So you've got to have access to your credit, what debts you've got, whether it's credit cards or car loans. And, a lot of brokers have tools to get access to that, that make it easier for you. But yeah, you've usually got to prove what you owe. So they're the main things, I guess. So what you own, what you owe, and who you are. Mm-hmm. Not so much sort of on the spending doesn't matter as much. So yeah, they're the things. I mean, I guess ultimately how your income sort of what you earn is probably the other thing. So how with pay slips, if you just get a PAYG and it's just a base salary, that's easy, right? Because you can just send pay slips. But if you have been paid a bonus over the last couple of years, you sort of want to prove that through whether it's tax returns or on your pay slip, usually in June each year, you can see the breakdown where it's like your income was X, but your bonus was Y. So generally you want a couple of years of that. If you're self-employed, you've got to prove what your financials are for the year. So you'd really want, in this scenario, you definitely need 2022s, but it's the last week in 2023 right now. And, July is usually quite busy for us because a lot of the businesses that have done well this year come back to us and say, right, what can I do next year? Because most banks will lend on the last 12 months if it's a growing business and we can sort of justify that. So yeah, they're the main things you sort of want to be across. But rough numbers are okay at the start. Like it's just sort of figuring it out. You don't have to have all these documents before you start a conversation. Okay.
So then now typically a mortgage broker would take a phone call from you, like you'd be calling them. In our system, you book straight in with Calendly. You just book straight into Giovanni's calendar. But maybe they have something like that on their website as well, where they would, you would just go straight into the calendar and you'd rock up and you'd chat. Do they, in that first initial chat, would you say it's good to have both? If I'm thinking of someone in a couple, to have both of the people there, or is it not necessary for that first chat? Or
it depends on the broker, to be honest. So some brokers try to jump to conclusions or jump to advice really fast. When I was a financial advisor back in 2007, 2008, one of my managers said, Chris, never assume, like you can, and I sort of said, well, you can sort of, because people have these generalizations, right? And it taught me a lesson in those first few years of advice is you could never assume anything and you had to ask the questions. And so I would say, that's one of the things I think brokers, can get better at, to be honest, because great advisors don't sort of cut to the chase. I sort of sit on the fence as an advisor to ask those questions. Would that make sense in that scenario? Oh, no, I need to ask that question. I need to check that. And you constantly are sort of forming this in your mind, till you get to what the right thing to do is. So what I'm sort of saying here is that, some brokers, might want to just quickly say, right, you can borrow X after 3 or 4 questions. And this is what your best bank is. And I just think they're the wrong brokers to go to. So what we do is we do the opposite. We'll ask all the questions. We get all the facts and figures. We can figure out what you're trying to achieve. We figure out what you're going to achieve after this decision. That's a key thing. Then we get all your documents and then we check that through, quite comprehensively. We'll do a credit file. We'll check your pay slips because usually sometimes those things don't match up what you think you earn, whether it's super or without super. What you think you got in savings isn't what you've got, it's a little bit less. And so we'll go through and double check everything and then complete a comprehensive strategy that then we also go and check bank policy. So we'll run it through bank calculators. We'll check, you know what, you can't use that bank. You need to use this bank for this reason, or you might have access to a policy benefit like no LMI, this lender, etc. So, and then we figure out what your repayments would be and what you deposit and how you'd structure it. So we slow it down. We don't want to, and then when you get, so you could, on that first call, you might not need your partner. Absolutely. It's always a great option. But the next call, I guess, in our process is actually with me, or it's with our loan strategist if you want to talk around the loan. And absolutely your partner should be in that call, because that's where you're making the big decisions, you know, like we're trying to buy our first home. You know, should we spend 800 or should we spend 900? Or, you know, should we buy in this suburb or that suburb? Or should we buy an apartment or a house? Or, you know, should we borrow at 90% or 88%? Or should we stretch to 80%? So these are big decision and educational sort of discussions. Or we know, we think about doing around how are we going to do that? Is that realistic? Or we're going to upgrade in 5 years. And so absolutely it's, you know, 100% getting your partner on board and having those conversations and then going away after a call and discussing them together and then coming back with questions and maybe doing another call. Sometimes we'll do, you know, 3, 4, 5, 6 calls over the journey because they're huge decisions and there's always things sometimes changing in people's situation.
And you can quickly see, I feel like you can quickly see, like I used to be quite like independent and I was like, you know, I'm just going to go direct to the bank and get a loan from the bank. But then you hear conversations like this and you think, oh, well, I miss out on a lot by just going and accepting whatever the person at the bank tells me or the app tells me. Like there's so much more to it, like the strategy behind it. If you get a good broker, it's just chalk and cheese, in my opinion, because they will give you that and they'll take the time and they'll respect that this is the biggest decision you've probably made in your financial life so far. And just so important. So the next part of like someone's, you know, books in your calendar, sends you, you know, whatever, an email, gives you a call, whatever. You sit down, you do that kind of initial brief. They send you the information. You have that, you go away, your team goes away and does what you call the strategy, which is where you get because I was confused about this. You guys get the documents and then you decide which banks would be the best for this client. Yeah. And then you might present 2 or 3 of them or
for sure.
Something like that. Then you have that big meeting with them. They make the decisions in their own time or in the discussion with you. Then what happens? So what happens from that point on?
Yes, absolutely. So you go through the strategy with a loan strategist, also with me, and we talk through the right options. And to be honest, loans are quite subjective, right? And let's say this is a purchase, right? There's 2 different options. There's people buying things, whether it's their first or next home or an investment. And then there's people just looking to get a better deal on their mortgage. So we'll talk about this in the mindset, you know, as someone purchasing. Because I think that's a bit interesting. Refinancing is a bit simpler, which we can finish on. So in that scenario, we would say, right, let's get pre-approved with NAB, Macquarie, you know, Bank of Melbourne, St. George, you know, et cetera, right? And we're getting approved there because it's the right policy fit for their situation. You know, maybe they're going to look at their situation the best. Maybe it's they've got really quick turnaround times. You know, for example, you try to go to St. George right now, we do quite a lot of loans with them. It's really chaos. It's a long turnaround time. But you go to someone like Macquarie, it could be done in 24 hours. So, yeah, great policy fit. And then also rate obviously matters as well. You know, to be honest, most banks are always competing very fiercely for business. And so there's usually a number of lenders which are in 5 basis points different. So we pick your bank. And the good thing with pre-approvals is all it is one bank willing to lend you that money. There's 0 obligation on you as a purchaser, to you ever borrow that money, but even if you do purchase, to even use that bank. So but you don't want to waste, you know, the bank's time lodging a loan with someone for a pre-approval if you're never going to use them, because it's just a waste. You're actually better off getting a bank who's a good chance of being a good fit. So let's say you decide in this scenario it was Macquarie, right? And what our team would do, or a broker's team would do, would go away and produce some compliance documents, like a credit proposal guide. You would have already got a credit guide, which is documents who the broker's licensed through, how they're paid, complaints, privacy, all those sort of things. So the credit proposal document, they'll also produce application forms for the banks. You know, they're all kind of digital and, you know, digital sign and things like that nowadays. And they'll get those documents. You'll sign those, and then the broker will actually use their technology, or the brokers are licensed through, a number of what's called aggregators, who then all have their own individual softwares in their CRMs. And then that software interlinks, straight into the bank software, right? And so the broker will lodge the application online, make sure everything's right. This is a key part they do, is they actually put amazing notes. Well, they should do. So because when you're preparing a file, you might take maybe 10 hours, maybe, on producing that up to this stage with a client, doing research, etc. And a key thing there is spending the time to really clearly say to the credit assessor, hey, you should approve this deal because it's a great customer. This is what they're earning. This is what they're trying to achieve. This is one of the risks that we've got around because of this reason. And so the broker will put in some really detailed notes there. They'll upload all your documents. That'll go into the queue with the bank. Now, depending on how many loans that broker does with the bank, how loved they are, they may have access to a preferential stream. So, if a broker doesn't lodge many loans with that bank, they may just be in the pool with every other punter. But sometimes brokers do absolutely get preferential. So you might get a bit quicker turnaround time. You might get better credit assessors as well sometimes with that broker because they've got a relationship. But ultimately, at some point, it could be 1 hour. Or it's where some banks are fast turnaround times, or it could actually be up to a couple of weeks. And in COVID, it blew out to sometimes over a month at places. So, after that period, a bank assessor will look at your file. Now, there's something called one-touch approvals in broker land. That is when a credit assessor looks at the file, looks at the notes, looks at the documents. You've satisfied every single condition for this bank, and they just touch approval. And that is a dream outcome. It's what every broker is trying to achieve. It's really hard sometimes to achieve with every client because they sometimes ask silly questions, the assessors, or brokers have actually missed something. They didn't upload a document they needed. They didn't, sign this document, etc. So they come back with what you call missing inquiry things that the broker hasn't sent. There's usually this back and forth, but this is not something you deal with as a client. The broker may come to you and say, hey, the bank asked for a payslip from June 2021 to prove your other bonus. We didn't do that. They just want that to be extra sure. So the broker would ask you for a few missing documents. They try to limit that. That's something a skill of a broker does. And then they go into bat for you with the credit assessor. Credit assessor say, mate, I'm not like this about the situation. Can you explain to me? There's this tennis match that sometimes goes on. And then finally, the credit assessor says approve. Depending on the complexity of the loan, it may go through the easy channel. They might have straight approval, or they might have to go to a higher level approval because it might be either a larger loan, more complex, an exception on the file, like it might be 1 year bonus rather than 2 years. And that's usually usually if it gets to that stage, it's going to get approved because the person approving it doesn't want to get told off by their boss that they missed something. So that's usually but sometimes that slows down the process. Finally, you get something called conditional approval. Now, the process I'm talking about here is actually a full humanly assessed pre-approval. It's not what you call an algorithm computer-based pre-approval, which are becoming prolific in the in the banking industry. More and more banks want to do those because they're automated, no cost, versus humans looking at them and spending hours of banks' money looking at it. So we always try to use banks that are using humanly assessed pre-approvals to give our purchasers complete confidence that nothing's going to go wrong. Sometimes we have to use the computer ones, but we obviously make you aware. So you get this conditional approval. And what it's usually, and people worry about a conditional approval. Generally speaking, that pre-approval will last for 90 days, sometimes up to 180. But what that pre-approval gives you confidence to do is go out to purchase, knowing that if you do buy, a bank will lend you a certain amount. So that might be a pre-approval to borrow $800,000. So you know that if you did purchase in that 90 days, that Macquarie or NAB or whoever that bank might be is going to lend you that money based on that pre-approval, assuming your situation stays the same. Because if you lose your job, the banks will check that, right? If you spend all your cash, that changes things. Or you take on these other debts, that changes things, right? They'll do a credit check on you. So assuming your situation is the same or better, the bank will approve that money. So, that's where you get to the conditional approval stage.
Okay, so conditional approval means you can go out and you can make offers on properties. I mean, you can do that without approval. It's just very risky, right? So, um, so this gives people the confidence. Sometimes, maybe I'm guessing most times, they might still say subject to finance, but I have approval or pre-approval or something like this. And so it gives people this sense. Roughly speaking, like if we take an average, Chris, you say sometimes it can be super quick, sometimes it can take longer. If you just take the average of a client that you've dealt with over the past year, just imagine the average of all of them, say, roughly how long does the process take from contacting the broker to pre-approval?
Look, I think there's sometimes urgency, right? Someone wants to buy a property on the weekend and they want pre-approval within a week. We could probably do it, right? Ultimately, I think you're leaving it too late. You've already looked at properties before you pre-approved. But if you go and see a broker, by the time you speak to them, by the time you get all your documents, by the time you do their strategy, by the time they do application form, I would allow 1 to 2 weeks for that period. And then, 1 to 2 weeks to get it through the banks. And sometimes if it's a quirky policy that you have to have and you have to pick one bank and they're slow right now, it could take longer, but it's not months. It's, and if you had to do it within a week, you probably could, and we could figure that out, but ultimately allow yourself 2 to 4 weeks.
Okay. Give or take, of course.
Yeah.
Okay. So would that vary if it was, say, something like a construction loan or a renovation loan or something like that? Does it get a bit more complicated and whatever?
It's a good question. Absolutely. So, refinances or you've actually got a purchase, they go through the banks a lot faster because they're actual deals that are going to go through versus pre-approvals that, if the bank's busy, they'll go, well, let's just do these. This is money on the table. This is people who may buy in the future. And so, if you're self-employed, it's a different level of quality credit assessor, right? You don't just get your first day in the bank and go, you're a credit assessor and bang, here's all the hard stuff, right? Yeah. Banks generally, credit assessors are massively under-resourced across all the banks. They all eat each other's credit assessors and they're constantly moving bank and things like that. So self-employed or, something a bit quirky with your situation, you will expect a little bit of a slower queue often.
Yeah, because I just know a lot of the RAS community have multiple properties or have development potential with some of their properties that they currently hold, and they want to do that. Like they want to develop and they need loans for millions of dollars as well, not just, the first home. So do you deal with those as well?
Yeah, absolutely. I mean, our average is quite high, and that means that one, we do a lot of more higher income clients, but B, we also do quite big portfolio investors. So, and a lot at the top end as well. So we are very experienced in the bigger loans and the bigger property investors, and all the way through to your first home buyers and how to get the best results. So. On the residential space, we really focus on the property decisions people are making around their life. And sometimes it goes into the commercial field, and that's a whole other ball game. And whether it's some commercials are really basic, it's just a refinance, and we're more than willing to do that. But once it gets really down the complexity in the commercial, we've got a number of partners and other brokers that we will pass that client on to, who all day, every day know how to get that client that result in the commercial space, and because commercial, there's a lot of lending that goes through the non-banks. So it's people that, it's not the big retail banks you see on the street, it's private funding, it's private funds, etc. And and there's hundreds of those. It's a whole other ballgame.
Okay, so I've got one final question, which is the final stage of the financing process, which is I've got my pre-approval. I've even made an offer on a house and it's been approved. My settlement is in 30 days. What happens on settlement day? Like I've got the loan. Do I need to do anything? Do I need to go to the bank? Like what happens here?
So you probably missed a few steps there on, but that's okay.
Go.
We'll fit them in, right? Okay. So once you've got this pre-approval, depending on the state and depending on how you purchase under, right? So you finally sign this contract. You may or may not have a cooling off. And maybe it's 30-day settlement, maybe it's 60 days, maybe it's 42, right? So the key thing here is going back to your broker straight away and making sure, are you going to go ahead with the bank that you pre-approved through? And you might say, no, actually, there's a better deal right now. I'm going to go fixed. I'm going to do it this way. And let's go lodge an application. So first thing is just deciding on the lender. Then it's really easy then, because if it's the lender you pre-approved through, the bank doesn't go through your full situation again. What they'll first do is order a valuation on the property. Now, 99.9% of the time, if you're buying an established property and you're acting normally, then you should be fine with evaluation. There are issues there, which we can do a whole episode on. If you're going down the off the plan sector, if you're, there's other reasons, right? But they'll do a bank valuation, which will come back usually at contract price. It won't come back more. It most likely 99% of the time won't come back less, no matter what the valuer thinks it's worth. They'll just value what you paid. Then they'll sometimes check your pay slips. So they say, just send us your latest pay slip. We haven't checked. Just want to check you're still working, to be honest.
Sure.
They sign that off. Then it goes to something called formal approval. Then depending on how the banks are with tech, some are really good, some are not. It'll then issue loan documents that hopefully will be on DocuSign. So you get these emailed loan documents. You'll go through those. And a lot of the banks, the governments have also made the mortgage form, which is like a registered sort of stamped mortgage on your property through the state revenue offices. They'll all be digital as well. So you'll sign those with your partner. You can go through it. You can check all your offset accounts, all those sort of things. Then the bank will check those documents, which are pretty hard to stuff up right now because it's all digital. Like you don't have to fill in things like you did in the past. The bank will certify those documents, check everything's right. You also sometimes at this point have to send them a certificate of currency for insurance. So let's say you buy an apartment, that's not an issue like strata. But if you buy a house, you then have to make sure the bank knows that you've got insurance. So this
is just like home insurance you get from like
building,
RACQ, RSV, NRMA, whatever.
Allianz, exactly whatever. Right. So it might be you bought it for $1 million, but the replaceable value on the home is 500. The bank would say, and the valuation would sometimes that's what they'll reference it to.
Okay.
But you have to send the certificate of currency, and then the bank will do check those docs, certify those docs, and then be ready to book in settlement. Right. At the same time, along a home loan process, what you're also sorting out is the legal process. So you're sorting out the settlement with a solicitor, and they're helping you sign forms that are around titles and adjustments to the council rates and the water rates that they're paid and things like that. Yeah. And then at settlement date, pretty much all the banks now allow you to put all your money in an offset account against the home loan rather than transferring your money to the solicitor. So they might say your shortfall is $100,000. And a couple of days before settlement, you make sure that your $100,000 is in that offset account and your loan certified, your settlement's been booked. It'd be most likely digital anyway. It won't be people rocking up to an office in the city. And it's on a platform maybe like which is called PEXA, which is a big platform. And on that day, you don't actually do anything, right? It's just two solicitors, two conveyancers talking to each other, also the banks there as well on the platform, and the title swaps deeds. And they debit the shortfall. So let's say the shortfall was 100,000. That goes to pay the stamp duty. It goes to pay what the other vendors owed. It goes to pay all these adjustments. And you'll have a couple of $1,000 left in your offset account. And then a few hours later, you should be able to collect the keys from the real estate agent. That's ultimately what should happen. If a broker's doing a good job, we've never missed a settlement. I think there was one, which wasn't actually our fault, right? Besides, where an issue can come for buyers is vendors don't get themselves ready. So the vendor also has to get ready for settlement. They have to discharge their home loan. They have to do things that's the property. They have to get all their stuff out. There's things that can delay settlement. But generally speaking, the day of settlement, you should get the keys, assuming the vendor is ready to roll.
Okay, so I'm going to try and paraphrase some of what you said and tell me if I get it wrong. So I've gone through this process. I've got pre-approval. I've found the property, put it in offer, ring my broker straight away, and I say, I've got the offer. I'm happy to go with the loan that you suggested on a variable or fixed rate or whatever you put together. And you're like, okay, great. You let the bank know. The bank comes back and says, hey, Owen, I need 2 more bank slips, pay slips. I want a certificate of currency, and I'll start putting together the legal documents, etc. I go to Amy or to whoever, insert name of insurer. I get the home insurance according to the valuation, which is being done at the same time as well by the bank.
Yeah.
The bank has its valuation, which it keeps, and maybe you could request it, but maybe the bank keeps it. And then my certificate of insurance has to basically cover what the replaceable cost of that house is.
Yeah.
In the background, once all that's sorted, it's gone formal. Is that correct?
Yeah.
So it's gone formal. It's going ahead. Settlement day is fast approaching. On the day, I, as the buyer, will need to make sure that I've got the money ready to put in that offset account that they set up for me.
Yeah.
You will say, okay, it looks like everything's going to go ahead on Friday. Make sure you've got the money in there. Make sure you're ready to go. You don't need to be there, but you will need to go to the real estate agent that afternoon if things go to plan, which they should.
Yeah.
And then behind the scenes, your lawyer and the vendor or the owner, current owner's lawyer get together in the background with the bank, make sure all the P's and Q's are done, and then happy days. The settlement transfers via PEXA, the platform that basically controls all property in Australia.
Yeah.
Yeah. Okay. And then the next day, the day after settlement, you got a big loan. You got to start repaying. You got to start being sensible. You get excited about the house, and the rest of your life begins.
Yeah, exactly. And usually about a month after the first, different banks, different things, but usually a month after you settle is when the first repayment is. Some banks do the 15th, etc. But yeah, so you've got a month to sort of get ready for that. So you check your offset accounts, 100% linked. You know, a good broker will just double check that. Banks make mistakes on that all the time. You really know what your first repayment's going to be. So then you try to make sure that money's in the offset account for the first repayment. You set up your digital banking. You know, you start to maybe set up auto transfers and things like that you if it's, you know, or direct debits, etc. So that's really the finance process. Now, after that though, that's probably good for 6 to 12 months. But after that, then you got to go back to the drawing board and start shopping. So you might stay at the current bank, but you might usually have, because the loyalty tax is so big, you might have to ask for a better deal. You have to go back to your broker, do a reval, you know, get a better rate, you know, etc. But that's the purchase process. For refinances, it just sort of skips that pre-approval stage. You know, they get formal approval, docs get issued. But the key thing with this is that you get formal approval, you sign the loan docs. But what you also have to do is ask for a discharge request from your current lender. Which some banks make it easy. They just give you the form online. Some banks mean you got to call up, and then you'll get the retention team of that bank throwing the kitchen sink at you and saying, "We did love you. We're sorry we didn't look after you, but we still love you. And would you stay if we give you a better rate?" And then you lodge a discharge, and usually 1 to 3 weeks after that, your refinance will go through. So that's kind of the refinance process, unless you're considering something called fast refi, which is definitely something. Just speeds up that process.
Yep. Well, I was happy that you guys did this for us because you realize that if we could refinance, blah, 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 go through that whole process, or we could just negotiate a better rate with the existing bank. And that was pretty good because that kind of came through and saved us some money anyway, without having to do a lot of their refinancing process, which is really cool. And that's again a benefit of a broker. I feel like I'm pretty one-sided with the whole broker debate, but I've definitely swung in favor of the broker debate, to be honest, from being very kind of anti it a few years ago, like 5 years ago, having been through the process myself, having seen how I don't want to say, but how murky some of the advice you can receive in property can be. Like, to get someone that you trust on your side is actually a huge advantage. So not just in the beginning, but also ongoing. And it's such a big financial decision. I have to make the remark, like, for the amount of regulation that we need to do on the stock market side for $500 of ETFs, versus like $1 million property for some folks. It's just get the right help, get the trusted help.
Yeah, and I think what you really want is that, like, what brokers are doing is they're all generally small business owners, right? It's moved away from big institutional ownership and all that sort of stuff. They might sometimes be franchised under an Aussie Home Loans or something, but generally speaking, and even if they are working within a business, they're sort of building their own reputation. And so what you ultimately get with a broker is a long-term relationship, not just for this decision, but the next decision. Like, time ticks by, right? And you've got your house. Now I want to do a reno. Oh, it's not the right place. We want to move to Melbourne, or we're going to sell, and how do we do that? And then, the broker's still there. Their experience is getting better, their team and all that sort of stuff. And you're right, around the refinancing, ultimately the best broking businesses don't just try to refinance all their customers every year, because their business doesn't grow. They just create work. Yeah, they create income, but they don't grow their business. And so, yeah, absolutely. If we can just get you the best rate and you're happy with that lender and it's close to what's best in market, we just say stay, or we recommend switch. So we do a stay or switch email every 6 months to our clients. So yeah, that's what we do.
Well, mate, you've taken us through everything. So from beginning to end, we had a kind of focus on people that are buying properties and more first home buyers, but this applies for upgraders as well, renovators, anyone. Get in contact with an expert. I think, like, when we do a survey of people when they come through podcasts and they ask questions, or when they onboard as members or students or anything, and it's very common that people have a trusted accountant and mortgage broker. It's not as common that they have a financial advisor in that mix. We'd love that to be the case, but because it's so expensive, a lot of them don't. But having those experts on your side is a huge advantage. So, like, go and follow the steps that Chris has laid out. And yeah, we'll go from there. Mate, I really do appreciate you joining me on this Friday Arvo to talk about the financing process, and loving what you're doing at Blusk. Congrats on making the top 10. I'm looking forward to the final results because yeah, I'm in your corner. So, mate, yeah, just really appreciate it. Thanks for joining me.
Thank you, Owen, and have a great weekend, mate. Cheers. Thanks for the chat.
Cheers, you too.